Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But before we get to our next guest, we're going to kind of expand on the Twitter story. The shares are still halted at this point, trading up about 12% at this time on a report out of Bloomberg that potential deal may be announced. The stock's halted for news pending. You see that's up about 12.6%, got as high as near $50 in the session. But also on the flip side of that is Tesla shares, which are down basically about $9 off of its session highs. Tesla stock was trading $256 before this report was out, and now trading down near $248. So seeing some weakness here in Tesla after a dive yesterday on the back of the delivery numbers over the weekend. But these are going to be, you see right there, there's the one day, 1 minute chart. You see that slide when this news was reported. So we'll keep an eye on that throughout the show and throughout the day here on the network. But Kev, let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Appreciate it.
Oh, no problem. So we've got this Twitter Tesla news. I know we'll probably be talking to you guys about Tesla shortly, but we're still in the retail space, Landon, and we kind of wanted to do this theme today heading into the holiday shopping season. Walmart's been severely outperforming the overall market. Their grocery segment continues to expand. 90% of the population lives within 10 miles of a Walmart. And this is, their busiest quarter of the year heading into the holiday shopping season. What kind of data are you guys seeing out of LikeFolio on Walmart?
Sure. So I think one of the reasons that they've done so well is because they have that food edge, right? I mean, if you look at the consumer trends that are helping them, the concern over food prices is through the roof. It's plus 150% year over year, with good reason. I mean, inflation is incredible. Not only in food, it's 8 points overall is the claimed number, but within food, it's much higher. It's in the 10, 12, even 15%, depending on which type of food you're talking about. Deal discovery and holiday shopping are up a little bit. Again, this is year over year. So obviously holiday shopping hasn't ramped up yet, but compared to this point last year, it is a little bit higher at plus 5%. So that's going to be a good sign for Walmart, Target, all of them. But when we look at sort of the picture, kind of compare Walmart to Target, and even throw in Amazon, it's just tough comparison, but really it's Walmart versus Target. When we look at those compared to each other, you see that Walmart is really lagging behind in both categories, in both purchase intent, which is that left to right axis, the x-axis. You want to be more to the right, not to the left where they are. And then also the vertical axis, which is happiness. You want to be higher with happier customers. Now, traditionally, Walmart has always had less happy customers versus Target. But seeing that the purchase intent growth is slowing compared to Target is a little bit concerning, frankly. And when we look at how the stocks have performed, you guys talked about Walmart. I mean, if you only held Walmart shares for the last year, you wouldn't really know that the market has fallen off, right? You'd be like, it's down a little bit, not too bad. It's sort of, it's outperforming. It's really doing well as a defensive stock. Target, not as much. And I think that if things start to take off, if we can turn a corner, and there's going to be some optimism today given where the market's at, but if maybe we can turn a corner, I think that Walmart's usefulness as an investment may be limited. It may be, it was a defensive play, it held its own, and now things start taking off again. I would much rather be in a Target or an Amazon based on our data.
Landon, normally when consumers focus on essentials, they tighten their budgets and focus on lower priced items. That should, by definition, favor Walmart. But Walmart's got the same problems that Target has. Sales are slowing, costs are rising. Sales this year, operating income is supposed to be down between 7 and 11% in fiscal 23. I mean, they've got some issues that they have, and they're working through inventory of discretionaries that they missed on. So the question is, with all this going on, it doesn't surprise me that people are happier in Target than they are in Walmart. But Walmart's a behemoth, right? That makes enormous amounts of revenue. But holiday sales are going to be important. And, you know, they've been holding on to traffic so far, up about 1% over the last 2 years, which is a pretty good number when the rest of the world is heading lower from those numbers. The question is where this stock sold off to, where it is now, the data you're seeing. Are these stocks all starting to get through this inventory and are brighter days ahead for both these retailers, frankly?
You know what? I think that's a macro question. I think they're going to go the way the market goes in general, as far as just the economy. I'm not talking about the stock market, just the general economy. If we can start seeing a turnaround, I think these companies are obviously going to do better. But if we do see that, I think Target's going to outperform Walmart. If we see a continued slowdown, a continued struggle with the economy, I would definitely rather be in Walmart. So it's between the two. You know, Walmart's sort of the defensive play. Target is a little bit more aggressive. And since they're in the same space, I think you can kind of make your choice there. The happiness, I think, is really important for the long-term factor. We always see at LikeFolio that happiness leads purchase intent. We haven't seen a huge move in happiness between these two companies, but it's just, you know, when you have that extra money, you're going to decide to go to the place that the price is going to be less of a concern, and the overall experience is going to be more into play versus when things are a little bit tighter. Now, they had a good quarter last time. I think their sales were up 6%, something like that. We were positive on them slightly. We had a score of plus 20, and the stock reacted pretty well. You know, overall, I would say that Walmart's done extremely well. They've already started on their holiday shopping. They're early. Everybody starts earlier every year. It's insane. They've started already on October 1st. Target and Amazon are right behind them on the holiday shopping. It is good to see plus 5%, like I said, year over year on that holiday shopping. I think that's going to help things a lot. And considering how tight a lot of pocketbooks are right now, the fact that that holiday shopping is up year over year is a good sign for the economy. It's only 5%, so it's not a huge move, but you know, given what's happened over the last year, I would have expected that number to be negative. So anything positive is good here.
So, Landon, full disclosure, I went into the Walmart for the first time in about 14 years, about a week and a half ago, and the size of their grocery business is just expanded. I mean, I couldn't believe it was more than half the store. Now, when you guys look at data going into holiday shopping season, and I know we're going to hit on that, you know, after it's over and as we get through it, and another set of retail earnings, when you look at that, is Target set up better than Walmart going into the holiday shopping season? Because it seems like Walmart's held steady and beat the overall market due to the fact that they're expanding a grocery business because people still have to buy food and staples, and they're at the lower end of the price point, where maybe come holiday shopping season, people switch back to Target.
I think you're exactly right there. That is why Walmart has done so well over the last year, is we've seen food inflation so high that it really made people think. I mean, I've heard so many stories of people giving me prices of things like butter. When, you know, you never look, a year or two ago, you never even looked at the price. You just pick it up. Now you're actually thinking, oh my gosh, this is $5 for butter. It's insane. So now that people are actually like thinking about that and really price sensitive on food, Walmart was positioned, and we talked about this, you know, a while ago on the show, comparing these two companies. Walmart is the leader when it comes to grocery versus Target. So they were very well set up to handle food inflation, food price concerns. If that eases, their advantage goes away. And in the holiday shopping, you know, you're going for gifts and toys. You're not going for food. So I do think that over the next quarter, I would be betting more on Target over Walmart just for the holiday shopping angle. But then if we can see any kind of ease in food prices, any kind of ease in inflation, just a general economy, pickup, then I think that's also going to lend itself towards Target outperforming Walmart as well.
Definitely. Yeah, and Walmart's only hiring 40,000 associates for the holidays. Target's hiring 100,000. So maybe starting to, you know, pivot a little bit to ramp up as far as sales after their inventory issues. Landon, we don't have earnings for about a month, just over a month. Do you guys have an earnings score now on Walmart?
Yeah, if they were reporting, which they're not, like you said, they'd be a -5. So basically neutral. We definitely want to see how they come in over the next few weeks before they report. But right now they'd be -5.
All right, great stuff. As always, Landon, have a great day.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data on here. You know, they were